Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the silver price action, as along with gold, has nudged slightly higher and now taking out that resistance seen at $17.60. I still heed caution due to the fact that the technical implications are still overbought. In light of the current pattern, we still can't discount a challenge towards our 17.8590 level, but unlikely to sustain. And if this pattern doesn't continue to show cracks as the rise continues on in the next 24 hours, then we could see a potential rejection from this region and look back towards $17.30 with a base now established around $16.95. So looking at the gold, you can see that the market has displayed a very strong rally overnight and now taking out the resistances of 1,285 to 1,294 after hitting its highest level in over a month at 1,295. Now currently, as I mentioned, the market is overbought and the trend is overheating. As you can see, last time when the market was in a downtrend, the ADX got to 50, and you can see now the market getting to the top side of this rally. It's now overheating when the ADX is again at 50. So I do expect to see a potential pullback from the resistance around 1,299 with the immediate support coming in at 88. Now a break beneath there will give further exposure towards 84, and it is only from there the market will break down further. So at the moment the range is locked in at 1,284 to 1,299 in the next 24 to 48 hours. Well, the Australian dollar is still slightly firm after yesterday's release of the RBA, who kept interest rates unchanged and preserved a record low cash rate of 1.5% after the monthly board meeting. The RBA has continued to distance itself from further interest rate cuts to support economic growth as policymakers confront the risks of an overheated housing market. Later today is the release of the national account data, which is the GDP, which is expected to show the weakest annual growth rate since 2009 and second negative quarter in the past 9 months. The market forecast is at 0.2% and the previous release was at 1.1%. What's also helping the Australian dollar is that because it's linked to a commodity based currency, is that the gold rally has helped the price overnight towards the region of this level of 75, 15, 25. I do expect to see supply to come into play. And as you can see here, the market is actually shying away from this level at the moment as it trades towards a 75 handle. It is viewed that the market will break down further and look towards 74, 55, 60, and with the base now holding around 74.10. In the unlikely event we do get a break above 25, it would be noted that a 75.55 bid will give further upside potential towards a 76 handle, but this is unlikely at this stage as I still expect to see this level hold and eventually turn back down. Well, the euro pretty much unchanged as it still hovers beneath the 112.80 figure level. In light of the current pattern, do note that the dollar index did print a low, a fresh, 7-month low of 96.45 to the index. Now the euro is weighted to the index at 57.6. So if the US dollar continues to sell off, then this will put further stress on this level around the 113 handle. Later on in the week, we still got the ECB monetary policy announcement, which is out tomorrow at 9:45 Sydney time in the evening. And with no change there and keeping their interest rates at 0%, should eventually see the price for the currency to drop back towards the 111.7080 region. Now that being said, if we do get a break above the 113 handle, this in the short term would leave me neutral, and I would need to then reevaluate the prospects to the next move. So we'll see how it looks. But I still feel the market will remain negative purely for the fact is the MACD is still showing little momentum here, as you can see. And also with the stochastic going sideways, does give further hope that the market will eventually drop away from this 113 handle and sell off towards that respective support that comes in around 111.70. Although dollar yen support got crushed yesterday at 110.0510, and now from the break gives further exposure to the downside, with all eyes holding towards the 108 figure 30 region. In today's session, though, we could see a short-term recovery. However, I expect to see the resistance of 109.75 to cap, and as immediate support coming in at 108.80. In the unlikely event we do get a break above the 109.75, then this might catch the market off guard and see a short rally up towards 160.65 before turning back lower again. So do be a little bit cautious if you are looking to shorten this currency. That we do get a break above the 75 could see a short squeeze. But nevertheless, while the US dollar still remains in negative territory, should put pressure to the downside. And to wrap up with sterling, little change as the market now awaits for the UK election. There is plenty of speculation as to what the political outlook may hold to the end of the result. The ruling Conservatives continues to hold onto a lead, but some polls have shown Labour closing in rapidly. It is considered that the pound will strengthen to probably the target of 130.60 that I have here if the Conservative Party achieves their aim by growing their majority in the Parliament. However, that being said, if the Conservative do lose the majority vote, then the pound may plummet towards the target that I've got here around 127.10 and reassess from there. But at this stage, it is very difficult to put any kind of strategy on while the uncertainty of the outcome from the UK election. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great day ahead.